You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means we are back once again for Education Wednesday. Yes, one of the biggest days of your options trading week. Mark it on your calendar. Every Wednesday, you're getting Options Bootcamp straight into your ear holes. For all of you on demand, you get it when it hits the network. For all of you cool cats in the secret club, you're getting it live now. In fact, you're getting another double header. I know I said last week we were going to be off this week, but actually we're back. So it's been back to back to back, pretty much double headers of Options Bootcamp. So you folks in the live get to hear all of that pretty much the instant we record it all. So you've heard the previous 4 episodes we've already got in the can for you folks. The rest of you on demand will hear it when they hit the network. We'll have one obviously this week and more in the coming weeks because my compatriot, Mr. P, is going to be doing a little bit of globe hopping. We'll get to that in a little bit. Of course, if you want to get access to all that live stuff, as well as get access to the exclusive content that we put out here on the network, in addition to the nearly 2 shows a day we're coming at you with, we also have, of course, our pro Q&As and our options oddities. Those are Tuesdays and Fridays typically, as well as giveaways throughout the week. Of course, you can join pretty much any show you want throughout the week live, ask your questions live, get bumped to the top of the list for all of our shows and a whole bunch more. theoptionsinsider.com/pro is the place to go to access all of that. And of course, if you're one of our many on-demand listeners, we like you, we love you. We know there's a lot of you out there. We're coming off the busiest week, I should say the busiest month in the history of the network. And that's a pretty long history. It goes back 15 plus years now. So that's saying quite a bit. A lot of that is due to you folks loving Options Bootcamp. So we thank all of you. Again, if you like what you hear on the on-demand front, all we ask is that you keep rating and reviewing. Just like this week, we've got a 5-star review from Ed, but Ed with an extra D. So EDD perhaps, or just Ed. Either way. He says, thanks! Exclamation point, 5 stars. We appreciate you. We say thanks back to you, Ed. EDD, whatever you want to call yourself out there. We appreciate everybody who takes the time to go wherever you get the show and rate and review. It does mean a lot for all the new folks. Clearly, the numbers reflect that. The new reviews, more important than ever, you could say. And you know what else is important is when I turn to my compatriot and welcome him on to the program. I'm pleased to say we are joined once again by the black-hatted one himself, Mr. Dan Passarelli, the founder of Market Taker, mentoring and the author of 1 or 2 or perhaps half a dozen options-oriented tomes. Mr. P, how go things, sir?
Mark, things are just plain old wonderful here. Just plain old wonderful.
Plain old wonderful. I like. What do you think about our friend EDD? He just says thanks, 5 stars. Got to the point.
Hey, you know what, man? A man, a few words. Like I always say, if I had more time, I'd have written you a shorter email. Let's make it nice and succinct.
Yes, thank you, Mark Twain. You're ripping off everybody. Ripped off Nietzsche on the show a few weeks ago. This week, Mark Twain. At least you're pulling from good sources, sir. I can't fault you for that. Really quickly, because we're recording this right now on Fed Day, and the Fed is imminent, sir. So we have a question of the week. It's going to expire any minute. Let's get at it right now before we know the actual answer. Our question of the week this week is, of course, today, really, it's a flash poll. How many basis points will the Fed raise rates? That'd be interesting. Bonus points. Reply with what will happen to the market afterward. You're going to rally, sell off, or meh, as we like to say. Give them 4 choices, Dan. 25 basis points, 50 basis points, 75 basis points, or a full point. So what is your vote, sir? More importantly, what do you think our audience is voting for? And what do you think is going to happen after we hear the numbers, sir?
Well, I'd be willing to bet you quite a bit on that, Mark. How about $25,000 that they raise at 75 basis points?
Oh, it just came out. Yeah. Yes. I was looking at it beforehand. Yeah, they did go. They did go that way. Yes. Okay. I was trying to get it in under the wire. Alas, we did not. But hey, more importantly, what do you think our audience is voting for, sir?
Man, I'll tell you. I mean, if they voted within the last 24 hours, I gotta believe that 80% of them would have said 75%. That seems to be like 4 days ago. I think people would have said 50 basis points, and within the last 24 hours, everybody would have said 75.
Yeah, it does seem like the narrative shifted in the last 24 to 48 hours, doesn't? All of a sudden, Goldman, everyone, the mother saying we need 3/4. And that appears to be what we got, sir. So a historic raise back to, 94, I believe, the last time they raised this much. So I guess congratulations to all of us. We win. It's one of these whoever wins, we lose kind of things, like Alien versus Predator, right? Our audience was on that tip as well. They were buying the 75 basis point hype. Nearly 50%, 48.8%, sir, said 75 basis points. Again, this is a flash poll. This is just a couple hours. So that's probably why it's so strong on that. 50 basis points, which was the consensus coming into this week. That was 36.6%. Some folks going hardcore, Dan. 12.2% saying a full point.
Wow.
And 25 basis points getting only 2.4%. So now here's the question. Here's the interesting question, Dan. A lot of people have been debating, if they went the other way, if they went like a 1/4 of a point, what happens to the market? What do you think? Obviously, we're seeing markets are still kind of holding up pretty much right now. So I'm guessing this is kind of what we expected, kind of a bit of a shrug, or you think we're going to start moving from here?
This is something like I put out a daily video that I think most of the folks who listen to this are on my email list, so you probably get it. But I'm almost surprised that the market didn't rally a little bit today. I mean, it sold off barely anything here, but I'm surprised that the market didn't rally because, I think this is the right answer. This probably should have been the right answer last time, but it's definitely the right answer this time. I think if they were like, oh yeah, let's just cut it 25 basis points, I wouldn't have been surprised if the market sold off, because then the futures would be just in for a poo-poo show.
That's kind of the consensus we had. First, we thought market would be rallying. It's like, oh, great. Then you realize, oh, wait, that's not good at all. And then, yeah, it would probably rally like half a point. Or half a percent, and then just tumble the rest of the day horribly. So interesting stuff. Yeah, so there we are, listeners, recording right on Fed Day. Hot breaking action, even though a lot of you are going to listen into this in the weeks to come. You'll know the answer. But be interesting to see what our audience was on the tip, and they were certainly on the 75 basis point tip with 50% of you. If you guys want to play along, Options is the place to go to play along on all of our polls, flash polls, question of the week, all that good stuff, and a whole bunch more. Meanwhile, Dan, you mentioned your videos. You've been cranking them out a lot, including a lot of them about Theta. So I think we'll start there, a little bit of the old options drills.
Well, in boots, time for our favorite pastime, option drills. We're going to take the strategies learned during the show and teach you how they can be employed to achieve a specific objective. Do you hear me? Yes, sir!
All right, everybody, welcome to Options Drills, a portion of the show where we tell you how to utilize an option strategy or a concept, or in this case, a Greek. Utilize it a little bit more effectively in your portfolio, perhaps use it for defensive purposes, or perhaps to mitigate the impact, the pain that it's going to cause you. And Dan, we're going to go on about Theta. I know you've been talking a lot about Theta these days as well. What is it lately, sir, that has gripped your attention and captured all of your focus around Theta, sir?
Well, there's a couple of things. One is I've been watching volatility, and it's been super interesting because the VIX was above 30 yesterday, earlier today. It's still above 30, but I mean, it was a good 15% higher earlier. And the fact of the matter is that maybe not today or yesterday, but like earlier, like the end of last week, a lot of stocks had underpriced volatility. And, first of all, what that means is that's nice for straddles. But one of the reasons why it's nice for straddles is because the theta actually ends up being underpriced in that scenario. And so, like, if you think about theta as just the rent you have to pay for having this volatility benefiting position, to put it in like first principles terms here, like it's been awesome. And, on the other side of that, when stocks have super high implied volatility, you just like get extra theta, like extra free theta. It's like having an apartment building and all of a sudden being able to double your rent for the same amount of work, right? So, yeah, I mean, volatility plays such a big role in theta. And so I just figured it'd be a good time to put it out there and make sure everybody's all boned up on it,
Let's bone up on it. Well, there's another good reason to dive into theta right now. We just went through one just a couple of weeks ago, and we're coming up on another one this weekend. It's, of course, the long weekend, the holiday weekend. This has kind of been a perennial concept, one that has bedeviled options traders since time immemorial, at least all the way back to 1973, the dark and primordial ooze days. Of course, what are we talking about? Well, of course, like I said, we just had Memorial Day. Now we're coming up on Juneteenth, our first time celebrating that one officially out here with the markets actually closed. So, yeah, we're having kind of almost back-to-back long weekends, which you don't see that often in the markets out there. So this comes into, again, a question that a lot of people ask. We hear that a lot on our Volatility Views program, particularly heading into these long holiday weekends, is, hey, when are they going to take the weekend out? When are they going to come for that weekend? So that's our first topic when we're talking about theta today, is the weekend. Again, this is an issue. We used to deal with this as market makers heading into a long weekend. You don't want to be caught holding the bag. No one wants to be caught holding the bag, paying for all that 3 days worth of decay. So what usually happens is, leading into the long weekend, people start racing each other, especially if it's a slow end of the weekend. Now that the Fed is behind us, a lot of people are obviously keeping their powder dry for this. I wouldn't be surprised if we start seeing some of the weekends start coming out pretty soon. Maybe not today, but maybe certainly by tomorrow. And we're going to start seeing that weekend come out. What does that mean? It means market makers, customers even, are starting to roll their clocks ahead. Remember, the theta ticking clock never stops. That's another concept people forget. I think just because the bell rings 3 o'clock here, 4 o'clock Eastern, and okay, we're done. Nope. Theta is never done. Theta is constantly eroding, constantly killing your options. So even though the markets are closed over the weekend, you are paying for that weekend in terms of time decay. And market makers, customers don't want to be left holding that bag. So they start lowering their offers typically towards the end of the week, getting into that long weekend, so they can dump their options positions, hopefully at a level that is above Monday's level, because otherwise they've defeated the point. They might as well keep them. And then they can hopefully avoid paying a large amount of that decay. Dan, I know you kind of just did a whole series on long weekends and theta. Very timely, because we just had one. We got another one coming up. What are your thoughts about theta, the impact of long weekends, and when they start taking this stuff out, sir?
Yeah, so it's interesting with long weekends. It's like a lot of folks who are, especially newer to options, even some who have a fair amount of experience, don't really think about this. But the thing is that theta is based on a 7-day week. And so, we think about, one day comes out and, 1 day of theta, your options are worth 1 unit of theta less. But, when you start getting around to just a regular Friday, when there's a 2-day weekend, I mean, they can start taking it out on Thursday morning if it's slow. And a lot of times, if it's slow, by the end of Friday, they're already trading on Monday's days. Throw in a holiday, a 3-day weekend, and, it really starts getting sucked out of there fast. And I'm going to tell you something. I bet that there's a lot of people who get caught off guard, not even realizing the markets are going to be closed on Monday, because I believe, if I'm not mistaken, this is the first time they were closed. They are being closed for this day. There's going to be some surprises, like, why the hell are my options getting so cheap? Because, one thing is, like, you don't see options getting worth less by theta. It appears that they're getting worth less by implied volatility falling. But I could go on a big soliloquy, so I'll kind of pause there, and we'll open it up to a more interactive discussion between me and Mark on that point.
That's kind of a good point, too, because this is kind of a surprise long weekend. I had to be reminded myself, oh, wait a minute, we do have a long weekend coming up. This is the first time we've had this. You're right. So a lot of people, especially right now, could probably use a bit of a refresher on long weekends. A couple of things to mention here about weekends and when they start taking that decay out. Again, it changes. There's no set formula. As Dan mentioned, sometimes they come for it Thursday morning. Again, the Fed's done now, so if the market remains kind of muted for the rest of the session, they might start taking it out today. If the Fed was kind of the big question mark hanging over this week here. So again, don't be surprised if they start coming for it. Again, if we start rocking and rolling again, like we did earlier in the week, 4%, probably going to have our weekend really stay through all the way until pretty much very late in the day on Friday. That kind of depends what type of week you're having. That's why I wish there was some clear-cut rule of thumb. Hey, wait till this moment on Thursday before you start doing your options trades, because that's the moment when they start taking the theta. Unfortunately, it doesn't work that way. It's very much, we get into the art versus the science of options trading. This is very much where the art part comes in, the subjective side. Some market maker might decide to start lowering their stuff. Customers might say, that's too soon. I want it. I want to buy it. I mean, right now is kind of a good example. We are still in the midst of a lot of uncertainty out there in the world. We have quite literal weekend risk going on right now. I mean, a lot of the big events, the tumultuous market moving things we've seen over the past couple of years, a lot of them happened over weekends. A long weekend, you have a whole extra day for more insanity to unfold. So that's something to think about. Maybe you don't need to race to unload all of your positions going to the long. Maybe you want to have a little bit in your back pocket for a rainy day. Dan, what are your thoughts on that? The notion of weekend risk and how these days it seems like we are seeing more and more examples every month of the fact that maybe at the very least you want to keep your powder dry, or maybe you want to keep a little bit of something in your back pocket for the weekends these days.
Yeah, it's a tricky thing. Like, let's not forget the reason why it's this sort of apparent weird thing that you trade 5 days a week, but you have theta 7 days a week. It's because, like, something can happen over the weekend that can revalue the stock you're trading or the market as a whole or something. I mean, what if on Saturday morning Jerome Powell says we had an emergency meeting and we got to raise interest rates 200 basis points and we're doing it today? Like, holy cow. I mean, obviously that's a crazy thing, though for sure crazier things have happened. So, like, there is risk over the weekend.
That there is. And, people deal with that in different ways. Some people used to just unload their positions as early as they could. They didn't want to deal with any of the theta. And they thought weekend risk, they weren't worried about. They didn't want to have any positions on going into the weekend, which is understandable. There is a literal cost to that, so I can understand that. But what we also used to see, and this is something I want to caution people against as well when it comes to theta and long weekends, is, okay, people coming in, and they look at their positions, and now it's, let's say, 2:30 p.m. on Friday heading into a long weekend. They say, oh, you know what? I got a lot of long options positions. I probably want to unload some of these because I don't want to pay the decay. Already at that moment, if you waited that long, probably too late. If you actually check some of your Greeks, if you have the ability, what market makers tend to do is they usually will roll the date forward on their market making platform. So it will actually take the decay out for them. So by the end of the day on Friday, they're usually trading at or around the levels for Monday already. They've already gotten there, usually 9 times out of 10. Now, if it's a crazy 4% down day, like I mentioned earlier, probably not. You're going to have a little bit more juice left in there. But in most normal circumstances, going into a long weekend, if you're that guy or gal who waits until right before the bell on Friday and say, okay, I'm going to hit the bid. Okay, I did it. I unloaded my long options positions, I saved myself 3 days worth of theta decay. No, what you did was you paid it already, and then you gave away your positions for nothing because you already paid that weekend. It's already out of your positions now. So you effectively might as well keep them on. You're giving them away on Monday's levels for no reason. You've paid the weekend already. You might as well take the weekend risk that you paid for and see if something happens. Because by that point, if you wait that long in the end of the week there, you already are usually trading at or near Monday's levels from a theta perspective. So just keep that in mind. If you're coming in the end of the session on Friday, you're like, okay, bam, 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 got to hit my bids, close these out, live to fight another day, stop paying all that theta. Too late. You've already paid it. If you do want to do this, if you want to unload your long premium positions before a long weekend, you got to start thinking about it probably on Thursday morning. And maybe like a day like today, we'll see how the market settles out. But a day like today, when the big news is behind us, again, think of the Fed announcement as kind of like an earnings event, listeners, right? But for the entire market, where you have what I've used many times, the analogy of the volatility balloon that is earnings. And as earnings comes, or in this case, the Fed comes, it keeps filling that balloon with more and more vol, more and more vol. And then the event happens and the balloon pops. And the vol comes crushing out of the market, and that's reflected in your theta. So at this point already, if we hang out here a little bit, again, don't be surprised if people start coming for the theta definitely by tomorrow morning. Again, so Dan, what are your thoughts on that old trade of trying to wait for the weekend and then dump your premium at the last minute when you're really already trading on Monday's level, sir?
Yeah. Like the main thing that I think that you hit on that is a big telltale thing is that you see it reflected in the implied volatility, really, because like the model that generates the theoretical values on Thinkorswim doesn't know that the market makers are taking the weekend out. I mean, it's just math. It's just a math equation that stays the same every day. So when those options get cheaper because the market makers move their days ahead, like it looks like the implied volatility is getting lower. And so, like, to Mark's point there, like, you should be watching implied volatility. And when you see it just super cheap, it's a big, not red flag, a green flag, because it's a good reminder that, oh, look, options are really cheap. It looks like it's implied volatility. It's actually theta. Either way, why don't I get in now? Because, if something weird happens on the weekend, I can benefit. And that brings me to a story. We have time for a story here, don't we?
Go to town, sir.
So let's talk about a quote unquote weekend risk. So this is back when I was a clerk. All right. And this was, well, a long freaking time ago, getting old.
1973 wasn't that long ago, sir.
Yeah, exactly. So anyway, so look, I was a clerk, and actually the year is important here. Oh, gosh darn it. See, I was going to say, it's getting old, and I was like, oh, there's a family show, I better not say this. And then I drop an SH bomb.
Getting us the explicit tag all over the interwebs, sir.
I know. Okay. So this was, wait a minute now. I had to Google it because I forgot what year this is, but this is not right. It can't be right.
Are you having a senior moment, sir?
No, I'm not having a senior moment. There's something that doesn't make sense here. I'm going to have to read up on this a little bit more later, but let me just tell you the story and let's forget about the year. This is early 90s. So I'm a clerk. I'm down on the trading floor, and the guy that I worked for was always long gamma. That was just his thing. He liked to be long options, didn't mind paying theta. He was very good at gamma scalping. And so he'd usually grind out some profit doing that along with his other market making activities. And kind of his big thing was he always hoped for that one big day, like, oh, the market moves 3 sigmas and boom, there's $1 million or something. But anyway, he was usually long gamma, paying theta every day. Some market makers are the other way. They always prefer to be short, volatility and making theta every day. And And look, the holiday schedule, even though Monday caught a lot of folks off guard, the holiday schedule is published at the beginning of the year. Everybody knows that Saturday always follows Friday, Sunday always follows Saturday, and every once in a while there's a holiday that's published, a couple years in advance. Except this one time, early 90s, there was what has become known as the Great Chicago Flood. Now, if you are old enough and you lived in Chicago in the early 90s and you lived through the Great Chicago Flood, you would walk through the streets of Chicago and not see a drop of water. All right? So where's the flood? So it's under the ground because Chicago, like a lot of major cities, it's built up on top of stuff, and there's all these like tunnels that run through Chicago, and some of them have wires going through it, and there's a lot of infrastructure that runs through it, and some are just abandoned and all that. And I forget what happened. A bridge collapsed, something happened, and like the wall to one of these main tunnels got punctured, and a bunch of water from the river or lake or whatever it came from flooded out these tunnels that held all the infrastructure of Chicago. So the problem with that, and the way this comes full circle to Theta, is that the Chicago Board of Trade, which is where I was clerking at the time, couldn't open. Like all its electricity was like shorted out or whatever the problem was, but like it couldn't open. There was no water on the trading floor, but the electric didn't work. Like it was impossible to open the exchange for like a week, I think it was. So guess what? All the folks who were paying Theta every day, you were worried about this 2-day weekend. Guess what? That 2-day weekend just turned into 2 days plus 7 days a week plus another 2 day to like a 13-day weekend. And if I'm not mistaken, expiration was in there somewhere. And so like people were coming in afterwards having made or lost massive amounts of money just on Theta alone, let alone not really knowing where the underlying was and if they were going to come in long deltas or short deltas. So yeah, there is this whole connection between volatility and Theta and weekend risk and just, the risk of stuff that happens. And, people talk about black swans and a lot of new traders just ignore them. They're like, oh yeah, that never happens. Crazy stuff happens.
Yeah, I remember hearing about that. That happened a few years before I moved to Chicago. So a lot of the old school traders would show me that one. But look at these clips, kid, of the flooding here in downtown Chicago. And yeah, you could see. I remember there was swirling little whirlpools of the water getting sucked into utility tunnel. That happened, a few years before I got to Chicago to start trading. So yes, you had one of the many literal examples of weekend risk, right? There are things out there afoot. Who knows what Putin's up to out there these days, listeners, right? A few weeks ago, he was shelling an active nuclear reactor. So there are many reasons maybe why you want to keep your powder dry these days. Dan, one other thing I want to get to about Theta and long weekends, and we got to roll out of here. Remember, we talked about Theta for a while here already. But don't worry, there's more coming up in our next episode, listener, so don't you worry. But the notion, and this trade became really popular with the advent of weeklies really a few years ago. Really actually call it the rise of weeklies. They had been around for a while, but they really started catching on a few years back. And all of a sudden, everyone and their mother was really just crushing all the weeklies. Just wanted to come in and harvest all of the risk premium. So second the weeklies were listed, bam, 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 they were crushing these things from the jump. And so what would happen is they would actually, for a while there, were actually overselling the options going into Friday. So by the end of the day on Friday, you could actually scoop the options at levels sometimes that were beyond Monday. You were definitely getting a free weekend, if not a free couple of extra days out of it. So that became the trade, to actually not sell the options on the close on Friday, but actually to buy them. And then you got a free swing of the bat for the weekend. Didn't really cost you anything. So that trade has mitigated somewhat as people have gotten a little bit savvier about managing weekly decay. And as we've seen pretty much daily expirations come online now. A lot of the big indices, people are a little bit better about managing that theta decay, but there are still opportunities and people get a little bit, shall we say, overzealous, Dan, going into the closing bell on Friday, where maybe you want to think about, instead of selling, maybe buying some of that premium. Is that a trade that you've talked about with your mentees? What are your thoughts of buying premium going into a long weekend?
Yeah, it's better than selling it. That's for sure. 100%. And it just seems so counterintuitive. But, when you think about it, like Mark's describing it, it's really not. Look, you would never make any trade if the market was fairly valued, right? Like every trader believes that the market is not as efficient as University of Chicago economists would like to say it is. And so that's the thing. Like people are always either overzealous or over fearful, and that's kind of how it is on Friday. I think when you get look, I work with a lot of traders, right? Like I've trained thousands, I don't even know how many, thousands and thousands of traders, got to know thousands of traders, did a lot of one-on-one, did group classes where it's very interactive. And the one thing that I know is that it's sort of like any other thing. Like it's a funnel, right? Like it starts out with like a whole bunch of traders getting into the market, and then some decide it's not for them. Some can't figure it out. Some don't like it. Some blow up. And, then it's like the fewer that succeed, that really put in the effort to learn and succeed. But like volume grows every year. So what does that mean? That means that there's always new entrants coming into the market. Right? There's always new traders happening. And we've talked about that with all the Robinhood folks that watch us, right? So what that means is that there's a whole bunch of novice retail traders, right? Like there's a lot of really great retail traders. Like, man, I trained some of these folks and they're killing it, But most retail traders, if you just take like the entire universe, like they're newer. They're just getting started and they're making silly mistakes, making silly assumptions like, oh, if I sell on Friday, I'm going to get 3 days of theta, and because like that's not the best way to do it, but a lot of people come to that conclusion. Like, I don't know, I'm kind of justifying in my mind and maybe in your mind how and why it happens, how the volatility ends up, how options end up getting oversold on Friday, So there's the smart money and there's the other people.
Don't be the other people. That's right. Listen to this show, right, Dan? We don't want you to be the other people. Be the smart people. You're already pretty savvy listening to a show like this. Speaking of listening, Dan, our live chat saying they like the moments when you go off the hook a little bit, that they enjoy those. They're saying your slips of the tongue are fun. What are we talking about, listeners, on the on-demand? That's probably going to get edited out, so you're going to miss it. But if you want to hear Dan swearing up a storm like a sailor, join the live. TheOptionsInsider.com/pro is the place to go to hear Dan talk up a blue streak here. But Dan, when you're not busy throwing out the cuss words, sir, maybe the folks want to reach out to talk more about that, where should they go? What should they do?
We'd love to hear from you. Make your way on over to markettaker.com. That's market like stock market, taker like take what is rightfully yours, 2 T's in a row at markettaker.com, and sign up for our free offerings. We're glad to share a lot of knowledge with you before you even make the decision to come further into the MTM family.
There you go, markettaker.com, 2 T's in a row. Don't forget that second T. It stands for Theta, what we're talking about today. And guess what? There's so much Theta on the brain. We got more in store for you for our second episode of our doubleheader coming right back at you for all of our live folks. We're going to dive even deeper into Theta. And of course, for all of you on-demand folks, that'll be hitting the network in a couple of weeks. Everybody out there, stay safe. We just mentioned very literal weekend risk. Keep your powder dry. And we'll see you back here next week, another episode of Options Bootcamp.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.